Good morning this Wednesday, the 26th of April. I'm Grady Wolf, a market analyst with Bell Direct. Wall Street closed lower on Tuesday as investor fears of a banking crisis reignited. Shares in First Republic Bank tanked more than 49% on the release of the regional bank's latest quarterly results, including deposits dropping 40% to $104.5 billion in Q1. But the bank have said that they have since stabilised and the bank is instilling cost-cutting measures, including cutting headcount by 20% to bolster its balance sheet. The results spooked investors about the broader weakness in the banking sector following the recent collapses of Signature Bank and Silicon Valley Bank. The results are the first time this earnings season we have seen investors react, as it has been a very uneventful reporting period so far. UPS shares also fell 9% on Tuesday after releasing disappointing earnings results, including management saying volumes were under pressure, while Pepsi Co rallied 2% on Tuesday on better than expected results. The Dow Jones closed 1.02% lower, the S&P 500 fell 1.58%, and the tech-heavy Nasdaq took the biggest hit, dropping 1.98% on Tuesday. In Europe, markets closed mixed on Tuesday following the release of some key earnings results in the region. UK hotel and restaurant group Whitbread rose 4.6% after the company said profits were ahead of pre-pandemic levels and announced a £300 million share buyback, while Nestlé rose 0.1% after the company hiked prices by 9.8% in the quarter. Across the markets, Germany's DAX rose 0.05% on Tuesday, while the French CAC fell 0.56%, and in the UK, the FTSE 100 fell 0.3%. The local market was closed yesterday for the Anzac Day public holiday, but has started the week on a very turbulent note after some of the key iron ore miners revealed that production was lower in the March quarter, which comes at the same time iron ore price slumped to the lowest level since December in recent times due to weaker than expected demand from Chinese steel mills and reports of stockpiles at iron ore ports. South 32 was the worst performer on Monday, dropping 7.4% after revealing lower production of iron ore this quarter, while BHP and FMG each fell 2% and 3.4% respectively on Monday. The red-hot lithium stocks of 2022 have continued coming under pressure in recent days after Chile's government, which geographically boasts the world's second largest reserves of lithium, announced a new plan for the country to take a majority stake in all lithium projects in the region. This bid for state control in Chile could be a positive thing for local Australian lithium miners and producers, as it may push up prices of the green commodity and divert capital to other producers like in Australia. On the commodities front this morning, oil remains under pressure this morning, trading 2.08% lower at $77.12 a barrel. Gold is up 0.4% at $1,996 an ounce, and iron ore is sharply lower, down 5.6% at $109.50 a tonne. On the Australian dollar front this morning, one Aussie dollar is buying 66 US cents, 88.4 Japanese yen, 53.57 British pence, and one New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local index to start the midweek session 0.52% lower on the back of global market turbulence overnight. On the economic data front today, we will see investors respond to Australia's inflation rate data for Q1, released just after midday Australian Eastern Standard Time, with consensus expecting a fall to 6.9% for Q1 from 7.8% in Q4, which, if it comes in at that level, will imply inflation has peaked down under and the RBA's rate hiking efforts are working. This data will also play a key role in determining the RBA's move next week on Tuesday as to whether another 25 basis point rate hike is required or if the pause can continue. The S&P Global Flash US Composite Purchasing Manufacturers Index climbed to an 11-month high of 53.5 points in April, following 52.3 points in March, indicating business conditions remain resilient in the US and provides another case for the Fed to continue raising rates in the US. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased its rating on Cyclopharm from a hold to a buy and has raised its price target from $1.70 to $2.80. On the medical device company, following the FDA notifying the company that its response for the new drug application for Tegnagas is now complete and eligible for review, with a new goal date for the announcement of a potential approval of 29th September 2023. And Trading Central has identified a bullish signal on Flight Centre following the formation of a pattern over a period of 25 days, which is roughly the same amount of time the share price may rise from the close of $19.19 to the range of $20.80 to $21.10, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday and happy investing.